Okay guys, this video is going to be real quick. I'm going to go over some of the things you can do to help your understanding of whether or not you should be using a zone again. All right, when a zone is holding, usually it's because it's important. There's a lot of orders in that area, and you can actually get fuel to the market in the direction that you want from that zone. So remember, the market is just buyers versus sellers, and that's all we really do. We find key areas of buyers versus sellers, and then use the story of the candles to decipher whether or not we should actually be entering or leaving it alone. So let's check it out real quick. Inside of the Telegram, I've been calling out gold, GJ, and UJ over the last maybe 2 weeks. I added gold about 2 weeks ago, and we're 4 for 4 on that pair. And on UJ, I had a gold zone that got missed twice, and finally we manually took it yesterday, and then manually took it this morning. And then on GJ, that was the one that had a bunch of different trades, sells and buys, and all that good stuff. So we're gonna go over that stuff right now, break some of that down, and I'm even gonna send this video into the Telegram, I think. So we're going to use a naked chart, and we're just going to get this going. Hold on. All right. And by the way, I'm not going to edit this out. I'm going to keep this part in because you know what? I'm tight on time, but I really want to provide you this video before the day's over. So at the beginning of the week, we actually, we called the sellout a sell. This is October the 24th. So the first one was Sunday. Let's see where we're at here. And there we go. Okay. GBP, this is the beginning of the week. GBPJPY, we finished the week with a nice buy opportunity on the GBP gray zone. After a nice smooth market, we got spiked to our seller zone late on Friday and gave a quick sell out. Personally, I will be looking for interaction with a slightly better sell price than the one from Friday. We'll also be willing to buy from smaller price, at least smaller price as last, similar price as last week, as long as we don't touch that blue price first. Okay, so I was looking for a buy from this position. We had that wick there, and I was looking for a higher high to take this thing down. That's really what I wanted. I felt that the market had a lot of strong bearish pressure, which for whatever reason I ended up forgetting later in the week, but at the beginning of the week I was fully trusting the bearish market. Also trusting this zone down here, and this is GBPJPY. I need you to remember that. Also on gold, in previous weeks on gold, we were selling from a lower gray position, this one. Right, we took a big sell of 100 and something pips from there, and took another one towards the end of the week, and then at the beginning of this week we looked for a higher spot. That's gold, XAUUSD. As far as the USDJPY, twice in the previous week you had missed me, and then this week I told myself if we got back to that zone I was going to manually enter. So let's see if we can actually find this zone without it giving me a headache. It was a gold zone, this one. This is the one that missed me twice, here and here. So yesterday when we finally got back down here, I took the buy, and my target was somewhere up here to that gray zone. If you can see that right there, gray zone 112.710. So let's look at them real quick. We're not going to make this a long video. We're going to breeze through this stuff real fast because the point of the video is candle confirmations and when to give up the zone. So beginning of the week, that wick that we were talking about with the higher high. Let's go to the H1 real quick. This is the wick, right? Expecting manipulation, I was looking for a higher position. Yes, there's Fibonacci confluence. If I do one of these, it's giving me up here. And if I do one of these, it's giving me this one, right? So I knew that my entry was somewhere here to here. Now, if I am not a good Fibonacci drawer, what do? I look left, and I looked at the last time where there was some strong market structure showing me seller's opportunity. Where do I see that on the left side on my hour chart? I see it here. This is a small support that tried to hold, and all the sell orders came in there. So this is a retest of that zone to drop 3-hour candles, and then boom, there's your drop. We took this trade. Now, I took this trade to about here, if I remember correctly, and then I took the buy, and then I dropped the buy. Right? I tried to take a buy again, and it ended up, I think, I think we ended up squeaking through, and I didn't do it again, or I left it alone, or something along those lines. I can't even remember, but I do remember distinctly that I regretted taking that buy again. I ended up losing that buy. So far in the week at this point, I was up hundreds of pips. I took a buy that I had to drop at 20 pips. We keep moving forward. One of the mornings during New York session, I called a buy, which was this one. It ended up being a quick, fast buy that lasted like 10 minutes, and it went for 60 pips and then quickly dropped down. What is that telling me? What is that telling me? It's telling me that the market, the seller's pressure that was here is starting to continue there. When we took that buy and it froze at the area where the market cracked down, you have to respect the fact that this is a seller's pair. Remember these words that I'm choosing because I'm choosing them carefully. Respect the amount of seller power that was here. So when it goes back up, you got to think to yourself, you know what? Maybe I should stop buying. Well, good old Zaps did not stop buying. I decided to wanted to take another buy. I never actually took the price because the fill of the wick and all that stuff told me to calm down. It left too fast. I never actually got in, and it went up for 90 pips. But what did I do? I'm no dummy. I pay attention to my charts right there. Right? I took this sell, called this sell out. Now, I say I'm no dummy, but once this thing hit 100 pips, I ended up cutting it. And then I tried for the buy, and I took an L. Now, it happens. I did not expect the market to break out that fast. I thought we were going to get another retest, and there's the mistake. The mistake is I thought for the chart. The chart was saying, you got wicks here, buddy. But what did I remember? I remember when they tried that on me last time. So this time I tried it. I actually got in, and I took the L, right? So there's my second lost buy, counter trend. Counter trend. Your probability on a counter trend already goes down slightly. So you have to be able to dump the trade unapologetically. You can't care about the fact that you're going to lose. So far on the week, 100 pips here, 70 pips here. I know we took some other little baby trades here, but I'm not even going to talk about that. 100 pips there, 70 pips here, and then this drop was also 100 pips. I lost about 20 pips here and about 20 something or 30 pips here, and then I had to drop the trade. So at this point now, you got to realize that the market is an all-out sell. All right? It's in an all-out sell. Now, how you confirm that is, of course, the higher frame. If I look at the higher frame, how did that look? The bullish candle dies and creates a new 4-hour candle at that position that we wanted. And then the market has stronger bearish candles than anything else. Then we get here, create wicks, and start creating, again, what? More bearish candles. We come up, create a wick here, which causes the drop. Now, when we got in for that buy is right there. So what do I have to do? I have to wait to get interaction again with that area to pick up those sell orders. That's exactly what we did. So if you didn't get in here, you could have got in here after that candle created the next 4-hour candle, and there's your continuation of drop. The reason that I dropped the buy in this position was because the 4-hour candle created and started squeaking through. And I'm not stupid. I'm going to give them whatever they deserve, or whatever I think they deserve, which is about 20-something pips. You got me. They got me for the full 30. It is what it is. And then I just keep it moving. Now, maybe Thursday or Friday, I said, okay, you know what? The only thing I'm willing to do here is sell. The sell opportunity continued. We even tried for a buy this morning from here. There's on the left side of your screen, if you know what I'm talking about, on the left side of your screen, there's details saying that this is the buy position that you want to take. Now, it gave you a quick move, quick 40 pips. If you didn't take profit, you were screwed. When you are counter trending, taking profit is your friend. Taking profit is your friend at all times in trading. But if you're counter trending, you need to take profit. And if you're honestly, when we're counter trending, you can justify it always with a higher frame, daily or weekly level. That's the truth. And since those zones are so wide, you never really know when that trend is going to fully bend. So if you're trying to take trades day in and day out, then you're going to have to learn to micromanage it. If you want to not trade as much during the week, then you have to take things that are on trend, wait for deeper positions of retracement, and let those markets play themselves out. Micromanaging it will do you no justice. What risks do you take when you do that? When you micromanage a trade and you're in and out of the market on a day-to-day basis, you take the risk of messing up in the beginning when you don't have a sharp eye. So you're chances of losing is high, right? Of taking more losses because you're learning and you're doing it day in and day out. Now, when you're long-term trading, that has its downside too, that you may actually miss the trades and never get in the market, so you don't get a chance to learn. How do you satiate all that? Low lots on a live account, or you demo, one or the other. You should never be full risk. If you're watching this video right now and I'm losing you with just market structure 101 and some advanced zaps tactics and sharpening of the eye method, then you should be low lotting on a live account, or you should be on a demo account, period. So when we look at this market on the GJ, obviously I am searching for another buy opportunity because I smell it coming. Okay, now I don't know yet what position I'm going to pick, but I've already started to mark it up nice and slow, because when this thing starts showing me wicks and pin bars and engulfing candles, you know, retracement retest, I'm starting to form Fibonacci structure in this zone. Guess what? I'm going to take that trade. So let's look at XAUUSD, which is gold. This is the one that I really wanted to look at, but I'm throwing in that extra value. This is last week. Last week I saw this. So when we got back up here, I sold it. Boom, there's your trade. Comes back, sell it again. Boom, there's your trade. These other ones, I don't remember what happened there. I probably just ignored it. At the beginning of this week, I was looking for a higher price. How we got it? Fibonacci structure. You know the deal, man. You know price action. So when the market got up here, what did I do? I sold it. Then when it got up here again, what did I do? I sold it again. And then when it got up here again this morning, what did I do? I sold it again. Now, why didn't I sell it when it got back into this zone? Because you have to pay attention to the bigger picture. Just like how in the GJ it was downtrending, here on the higher frame we are uptrending. It's a visual, obvious thing that we are uptrending. The market created a low, and then the lows get higher and higher and higher as the days go forward through the week. Okay, so because of that, I never forget that the bullish pressure is always looming. So what was I looking for? I was looking for this thing to break the EMA section of the 50 and the 144, or this trend line that you see here. Same thing to me. It's the same crap. So the market had created this high, and we were using it trying to break this low, this low as much as we could, which was once our former high. What is that saying? That's saying that we are still with bullish pressure, bullish push, bullish uptrend, bullish power, bullish orders. They're still looming. So what do you do now when this market starts coming back like that? Look at this hour candle. You do nothing. You do not re-enter this just because it worked the previous 3 times. I don't care if this thing gave me 120 pips. I don't care if this one gave me 100 pips. I don't care if this one gave me 60 pips. Does not matter. It is getting higher and higher and higher. So you're starting to squeak through, which is going to more than likely cause a breakout. So what do we need? We need orders on the seller side, or we need for this thing to come back and show us, you know what, we're still going to chill out here. We're still going to stop and do nothing in this position, and we're going to keep buying. The trade's there. There's 100 pips of space from that low to that high. Just let it print candles. Pay attention to the market. Read it. Just how I did it just now. It's exactly what I was doing when I was marking up those charts. There's a reason why I trusted this until I couldn't trust it anymore. There's a lot of candle stalling here. I love it. I love it. There's wicks. There's weakness here, showing me there's still indecisiveness as to whether or not we're going to keep pushing this up. That is how you trade. Yesterday, my TP was 129 flat, which is like right here. We missed it by like a pip. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, blah, blah, blah. Am I gonna freaking keep holding on to what I got up here after 14 hours of it just starting to creep up? No way. I'm feeling the weakness of the seller point here. I'm feeling the weakness of the seller point here. All the sellers that are in this area cannot hold this. I'm going to get stopped out. And then everything that I had here, which already was cut down by 50% because I am a profit locker. That is what I do. I would have lost the other 50. No, I'm taking whatever I have and we're walking away. Then we take the trade again. There's your profit. Guess what happened down here? Again, took the profit. Why? because the trend line's there. Once this thing started shooting back up, that is it. I'm taking whatever I can get. And am I re-entering because I lost out on 30 pips of full risk? No. Am I re-entering here aggressively just because it stopped? No. No, I'm not. USDJPY, all of them got similar examples. This is the zone that we were using for a while now, buying and buying and buying and buying. What was the other zone of importance? This high. What was the other zone of importance? This middle ground low. Okay, so when I was looking at this market, 3 areas of importance in my mind. And the market missed me once, missed me twice. This time I manually entered. Boom, 70 pips. Market is creating what? Lower highs. Go to that H1 chart. It's looking kind of ugly for the buyers. Lower highs. It comes back down here again. I try it again because it does stall for 1, 2, 3 hours, which is what I like. 23 pips, and then just freezes here, closes with the wick, and starts coming back. I set my +1. They +1 me. I do not get back in because I'm irritated. I just say, I'll see you next week. You're dead to me for the rest of this week. I don't want to talk to you. Leave me alone. And then the market continues down for 47 pips. Everything was set inside of the Telegram. The planning is always the same. +1ing is not just about getting you out of there because you're scared of losing money. +1ing is so that the trade ends and you can think with a free and clear mind. When I look at this chart and think about what I'm about to do, whether I should re-enter for the buy, okay, the answer is clearly no. Not because of this, but because of this. And because this thing created a lower low and it should have shot me up the way I wanted. It didn't do that. 5 hours later, it started coming back down. And then 7 hours later, it went down just a little further. And then 8 hours later, it went down just a little further. No, I'm good. Thank you. I'll take this, but if this doesn't break, guess what? When it comes back again, we're out of here. We're out of here. There's no way I can take this again. So what do? I wait for a higher frame to show me something new. Show me something I like. You know, maybe show me like a test of something, some wigs, some body creation, something sexy. I want to see something sexy here. Now you may ask yourself, why didn't I take the sell? Because I didn't. Period. There's no other. I didn't take the sell because I didn't. I was buying. And because I wanted the breakout. I wanted to wait to see if we got the breakout. Could I have taken the sell? Of course. But when we look at this chart, what does it look like to you? A strong sell, but before that, I saw a whole lot of buying. A whole lot of buying. So I had the bias of a buy, and I did that as smart as possible. And everyone profited who took that trade, as did I. And that is how you trade, from the position and the price, and following what's going on this market. On gold, that was against the trend, and those trades went for triple digits, almost all of them, 4 of them in a row. That's just the way trading is. But the market would not give me the breakout I desired. It needs more orders to do that. On gold, we were in for the sell. Totally dropped the ball in the continuation of this trade. It happens. I was so stuck on taking the buy to retest price and come back down that I forgot that we had got the optimal entry at the beginning of the week that probably was going to shoot us straight down. The moment this thing broke out and I took this second entry, buying should have been out the window and out of my mind. But I was so busy waiting for the retest, the manipulation one more time, that I dropped the ball on the fact that this thing could actually continue and cause a continuation of 247 pips. Now let me offer this to you so that you don't feel so bad when you make a mistake. At the beginning of this week, I entered from this particular zone. This trade, like I said, was called out hours and sessions before it actually happened. The market dropped from that position for 462 pips. I also called out to sell from this position because this is the buy that we took during New York, and this is the retest. This was during Asian. My call out was when we were here. So when this market got back up to match that price, I took the sell. This is a 3-hour stall, my bread and butter. I love it. And then this entry went for 345 pips, meaning that I could have easily had 700 pips in 2 entries on the week. If I really want to piss myself off, I also called out this, but I just never took it. But you know what? I'm not even going to count that because we never got in, and I don't want to make myself angry. But understand that mistakes happen. And in the moment when you're looking at the chart, sometimes you're hyper focused on what you're doing. And especially me and Jonathan and Miguel, who's calling out trades in the Telegram. I have students, I have things I have to answer, I have other things that I do, businesses and different things that I take care of. So there are moments where you kind of lose track of the ultimate bigger picture, which was selling. I was so stuck in the short-term manipulation of the retest of that high to actually break that low that I lost track of the game. Doesn't mean we lost money. We made tons of pips this week. We caught tons of pips this week. But it's the way the game goes when you are in and out of the market and you prefer to take profit. It's also the way the game goes if you're long-term trading and the market never breaks out, like the gold trade. If I wasn't taking profit here on the gold trade and I let this thing come back, it would have canceled me out 3 times. Everything has its risk and reward. Everything has its good and bad. So find a middle ground to satiate your profits, to lock those profits, always skimming out the trade. If you make profit, you cannot be wrong. Do your best to follow what the candles are saying. That way, when you are trading, things are nice and easy and there's very little going into your buys other than what you see on the chart, and you keep your emotions out of it. If I would have done that on the GJ, I would have easily been able to continue this trade with no problem. I overthought it, didn't pay attention to that lower frame to tell me in the immediate what was going on, and it is what it is. And on that note, guys, you have a great weekend and happy trading.